Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, the 14th of March, 2019. I'm a little early. It's about 3:50 p.m. Central Daylight Time, and you can see the markets, where they're at. The settlement prices are already in, and you're going to be right around this zone. Now, the market's paused, and it's paused in the stock indices in a most interesting area. It's, other than the Dow and the Russell, back up to areas where we've been at before, where the market keeps failing from. The Russell and the Dow have their own problems, especially the Dow, of course, with Boeing, and they're saying that a quick fix could take 6 weeks or more. So the question is the liability for the company, what happens, blah, blah, blah. The dollar up a little bit. That seems to have taken some of the energy out of the metal markets. And Dr. Copper, as we call it, pretty volatile day. From its high, it was down about 6 cents on the day, and it ended up down about 4.5 cents. So the question there, of course, is it sort of gives you an indication, is there something good or not going on with China? And apparently there's not just yet. When we look at this area chart of closes, you can see that you've been here, done this before. You got up to this zone before there, here, you're a bit higher than it, but you're not mounting. Now, I think the market let something on intra-morning because the president did say that the deal with China, the negotiations are going very well, and it definitely took the market back up. So I think that those that think that when a deal is ultimately announced, that it will add fuel to the fire on the upside are right. The question is, of course, when will that be? And we don't know. And every day that goes by, you get frustrated traders. You can see how you've come down, back up. Some people might call this a mini shoulder, shoulder, and a head. An inverted head and shoulder formation. And if it is, and the market breaks out from here at the end of the week upward, you're going to hear people saying this market's ready for another leg, at least from whatever the measurement is from this point to that point. As a chartist, and that's why we have these different chart patterns in our futures trading kit, you learn to spot these things and you pay attention. That doesn't mean that they work, but it's a formation people will talk about. I prefer quantitative numbers, and the swing line is actually that, because it's looking in a certain way, are we trending or not? And this market is saying you're not. You've got a higher high, a lower low. I can see the head, I can see the shoulder formation there, but that's what it's saying. Now, what would turn the market, because it's interesting, I just said that to you on the other part, is if you get over 28.2650, and you don't settle back and get under today's low, you'll end up with higher lows, higher highs. That could be interesting in itself. This is all happening over the 18-day average of closes, which had a bullish crossover over the 200-day back here, and the market had a surge back up to those old highs and a little more, and just couldn't mount it. Where do you think the resistance is if you're looking at this? Let's take a look at Bollinger Bands. You tell me. You're right on it. You got on it yesterday, you're not going anywhere. The longer the market can go sideways like this, something big comes out of it. I cannot tell you it's up, I can't tell you it's down. I can tell you that, like you put a spring in a pipe, when it narrows in, and what's happening here is volatility has come out of the market, it's in a stall, it's building pressure. And as that pressure breaks out, the question is, which way? When I look at momentum, you're overbought. So I think the pros were coming out of trades on the upside. The market's overbought against the resistance area, and they'll wait and see if the market can mount anything from here. Often, when you get a breakout, upside or downside, out of sideways Bollinger Bands, you'll first, just like here, get oversold. It's very common. But then it starts hugging that band as it pushes it one way or the other. In that case, it was down. It would have to be to the upside. And we've had a lot of false recent breakouts in these markets. When I come to the NASDAQ, you can see where the resistance is. It's right on the Bollinger Band. It's like the market got to that number and suddenly it's lost its momentum. It doesn't trend right here. This market's got a lower low and a higher high. When I come to the Dow, we've had the higher lows, higher highs, but this market's had a heck of a time getting anywhere over that line in the sand, the 18-day average of closes. Plus, it too is now going sideways. Last, the Russell. coming up, hit yesterday the 18-day average, and you completely ran out of momentum at this point. Even the slow stochastics are just now going sideways. And again, we're getting that sideways action. Sideways action is my friend. Eventually you break out of that. The trick is catching the market as it breaks out of that. In the VIX, I have said it before and I'll say it again today, I still expect the pros are going to be selling the lower Bollinger Band. Now, today's webinar, we had our live webinar, a lot of you attended. I was explaining why the selling of puts has been doing so much better when you get down there than the selling of calls, which is still done well. But what happens is when you have low volatility markets, you can get a spike to the upside. When you have a low volatility market, it's real hard to get a spike to the downside. You can work your way down, you just don't go the same way. In the T-bond market, we've decided that this market now, not we, the marketplace, has decided that it's just sitting and looking. You have divergence. You've got momentum turning down. You have higher lows, higher highs over the 18-day average. The market at best is overbought in an uptrend, sort of stuck at that 18-day average of closes. The 10-year note's a bit stronger. It is overbought. It has not entered the embedded status yet. It's just plain overbought. If it can rally here, I'd still look for the upper resistance of the 123.03 area, the upper Bollinger Band. It can afford to slip back to the 18-day average, but if it gets under 122.12, it'll suddenly be what? Well, if you look at the high here, that number's 122.29. This number was 122.30.5. You could end up with lower highs, lower lows, which would call for slightly higher rates. You haven't done it yet. TLT out of its trend. You slipped back today, got to 120.92, taking out 120.98, giving you a higher high, lower low, overbought condition, stuck at that line in the sand. I laugh when I say it because it so often happens. In the dollar index, yesterday was the first move under the 18-day average. Go what I said I wouldn't be surprised if the market tries to come back and fight a battle against the 18. That seems to be what we're doing. You're not trending. You have a higher high, lower low. Momentum is sort of flat on you. You've had a correction. I hate these vertical quick moves up or down. They make it very hard to trade with any reasonable risk. In the eurocurrency, today's action gives you, at least you can argue, lower highs, lower lows that can change. Like that in favor of this market if you take out 113.43. That would give you the potential of higher lows, higher highs going into the end of a week over the 18-day average of closes. So the bear's job is to defend that position, and that's what they're doing right now. Momentum is of no help. It's pretty much just going flat on you. In the British pound, if you knew nothing else, and you've seen me, you know that the first challenge of the upper Bollinger Band is where I think pros take money off the table, and that's what I think happened. I don't think you're trending. I don't even know what to tell you what's going on with Brexit. All they do is have votes, and I don't see anything that's a full resolution of anywhere on this. It is confusing. In the Japanese yen, you have the Bank of Japan. I think it's tonight with their monetary policy. People are expecting it to stay very moderate. The problem for the market has been you rallied enough into the 18 and 100-day average to find your resistance, but you haven't set up a trend to trade other than saying overall the market's staying under the 18-day average, which is bearish. Where would you put a stop? Bitcoin, stuck, glue at the 18-day average of closes. And I've been on TikTok. I just got invited again for next week. And I've been talking about this. And what I'm saying is your momentum, take a look at how the difference of your Bollinger Bands. They're coming in for a move, and the question is which one. I talk about that on TikTok. You might want to look at it. And suddenly, look at the differential between Brent and WTI. I mean, it just came caving in. This is the lowest it's been, the difference in price. You got to go all the way back over here in mid-February. And if you take a look at what's going on, if you knew nothing else except you watch this, you know what I'm going to say. These narrow Bollinger Bands, volatility's coming out, the market's into a resistance zone, it's not trending. You got a higher high, lower low, stuck in a sideways pattern. I know the market's come off these deeper lows, but I also know right now it's just going sideways. WTI is trying, U.S. crude is trying to push to the upside. Can it do it's the question. I realize that to get a real breakout of sideways action, you're going to get overbought, which you are. It's not giving that I see an entry opportunity other than you're buying a Bollinger Band, which I've never taught to do. Gasoline, this is a resistance zone, the upper Bollinger Band, but you're still embedded. So any sizable intraday break until you lose that red line closing under 80 again, I think the pros are buying that. And in that gas, we've moved to the May contract. Keep that in mind. Got a higher high, lower low. It's looking for direction. I don't see a trend on this market either. There are so many markets that I'm not seeing a trend on right now that it gets a little frustrating when you're trying to talk to you about it. But it's just what it is. You don't always have trends. In fact, I'd say most of the time a market isn't trending and then it does. How often do you think, I want to do this and I wish I had somebody to talk to about it? Or I'd love to see an idea where a broker isn't pushing me and he's not saying, yeah, let's do that because he wants anything for a commission. I've seen that. You've seen it. We've all seen that. You think that. Well, what I did is I created a morning video that covers all of these markets and ETFs. You'll see if you saw today's, it's there. I cover it with chart action, what I think the pros are doing. I'll call them active traders. Technical and fundamentals, because every day you start off at 7:30 in the morning, we get a lot of fundamental information. And then the trade ideas. I put this out at 8:30 in the morning. That's when I record, that Central Time. The reason is I want the stock markets, the cash markets, the real markets, to open. Chicago time, that's when they open. I want the VIX to get going. I want the ETFs to get going. Got it? So in order to do that, I've got to wait till everything at least opens. I've had people say, put it out earlier. Well, then you're not going to get the benefit of that. So I do that. By 9 o'clock, typically, you've got it. And the way I talk and what's going on, believe me, it covers a whole day's worth of action because I'm going to give you the trade ideas. I'm going to throw out day trades. I'm going to throw out what might be position trades that you might like, trade ideas all the way down the road. Do I do it for free? Basically 26 cents a day. I think that's pretty free. What can you get for 26 cents a day? So if you're interested and you'd like to try this and you're not tying yourself into anything long term, you can either call my staff or go to our website. Under the word education or research, take a look at morning subscriber video. You can see how it works. You can sign up after you've signed up originally if you want for a one-year subscription instead of $15 every 30 days after the introductory price. I think it gets down to $13. So pretty good deal for you. You decide if you like it. I think it's worth you looking at for 26 cents a day. I'm Ira Epstein. Have a good one.